Well, let's wrap this thing up. I want to say one last time, it's been a pleasure having you, Shawn, and we talked a lot of cotton here today. Obviously, it's a very critical crop in Texas. Two things I want to finish with is planting dates out in your part of the world with regard to insurance. It's got to be in by certain dates and that sort of stuff.
Right. So on the high plains, we actually have 3 different final planting dates that we kind of contend with. And if you kind of think of the panhandle of Texas and just kind of do a southwest to northeast gradient, so you kind of moving southward, we have a May 31st final planting date for our extreme northern area, north and western areas. Then the middle tier is June the 5th. And then our southern area is June the 10th. And then pretty much the rest of Texas below the Cap Rock, and then back to towards the Blacklands area, that Rolling Plains, mainly Rolling Plains, St. Lawrence, they have June the 20th final planting date. So we have kind of a range of dates there, and it really kind of follows frost days and that sort of thing. But we'll be rapidly getting to that point that we're going to be looking at running planters here probably in the next 6 to 8 weeks, and so there's a lot of field work being done. Like most of the other areas of the state, we expect our acres maybe to be a little bit down in cotton this year, but probably not maybe to the degree that some other areas are. Cotton still, even at the price levels that we are seeing today, gives us an opportunity, I think, to make more yield when conditions are favorable, and certainly they look good right now. So I think a lot of people are going to go ahead and roll the dice with cotton this year and hope for the best.
Well, that brings me to my next point, and then you triggered another question I need to ask you after that. With regard to the safety net for cotton, a lot of people want me to compare the safety net provided to the grains. Let's just say corn and sorghum and wheat and soybeans and such, to cotton. And we all know it's different because of WTO. To say that none of us were in the room to know exactly why we had to give up these things and all this stuff. At the end of the day, to me, the safety net for cotton is still very strong within the insurance program. The biggest difference, and some people have this stuck in their craw still, the biggest difference is the free program available to the other crops through either ARC or PLC versus the pay-for program through the insurance RMA type program for cotton. With regard to, each has pluses and minuses we can go through. When you say you got to pay for something, but the government's paying 80% of the premium cost, it's not free, but it's still a long way down the road.
Right. It does. It's kind of built to be a positive benefit to the grower. One way to kind of think about that 80% subsidy is that for every, crop insurance is rated to basically be a break-even program. Right. It's supposed to pay out indemnities equal to the total premiums, and that's the producer premium plus the government subsidy, the total premiums that are collected. And so when we look at a program that has an 80% level subsidy, one way to think of that is that for every 20 cents that the producer is paying in premium over time, he should expect to get $1 out of that program. And so that's a huge financial benefit to the grower, just in terms of how it's structured. You add in the benefits of not having any payment limit associated with the benefits that are then payable through the programs, and there's a lot of pluses to it. Now, as far as how everything kind of came to pass, I think you'd probably agree that if insurance prices today for cotton, if we weren't looking at 64, 65 cent base prices for our insurance products in 2015, if we were looking at 75 or 80, these discussions would be a little bit different.
Yeah.
And certainly, we can't wait to get back to those levels. And when they do, these products are going to look even better. But this is a process, that cotton went through. It's a long process. I mean, we're talking a dozen years of litigation between governments through this WTO case. There was a very strong sentiment in Congress to do something about this case, because the threat that Brazil, quite honestly, was making wasn't against agriculture.
Right.
They were threatening, intellectual property rights and airplane parts
Right.
and different things that really get a lot of people
Right.
the attention in Congress. And so there was a strong push to get this case settled and put away.
Right.
And that, unfortunately, as a result of the way that the situation went, it resulted in what we have today. Now, with generic acres, with stacks, with some of these other components that we still have in our arsenal, the loan program, I think cotton can still develop a very robust safety net.
Right.
But like I said, it's just kind of wish that the prices hadn't
Right.
happened the way they did.
The whole time we were doing analysis on this bill, the prices are not where they're at today. They were substantially higher.
Yeah,
Uh,
that's part of the uncertainty of the
Right.
cotton business, and that's really kind of the elephant in the room, which is China, and they have such a huge place in the marketplace, both from the stocks that they hold to the bales that they purchase. That whenever they decide to shift policy, you're going to see some pretty significant and relatively quick responses, and that's what we saw with prices going down after China announces some changes to their policy. Now, depending on how fast they move through this,
Right.
will determine how long we kind of stay in this lower range of prices. But hopefully we can get things moving back in the right direction a lot quicker, sooner rather than later, I guess.
Sure, and again, when asked about the safety net, there's nothing wrong with it. It's just going to be a lot better when we have higher insurance prices, because that's the trigger points. And so,
Well, and I think that the parallel for other crops is that the prices that were forecast for corn and grain sorghum and some of these other major commodity crops during this farm bill, they were a heck of a lot better than they are for their cash crops to what their cash prices are today.
Right.
And so I think you're seeing all crops kind of feeling this pinch that
Right.
maybe some of these programs aren't going to be quite what they thought they would be going forward.
correct.
And then, of course, nobody has a direct payment anymore, and so that's adding to that. I think it's really just adding to the stress that we're seeing this year, especially up in our part of the world, as growers are coming off a relatively disappointing 2014 crop, and disappointing from the standpoint that we came close as an area to producing very near our 10-year average. But for many growers, the cost that they've had to initiate to try and get to that crop at the end of the day, it just came in a little bit short of where they needed it to be, and a lot of them are just having a lot more challenge, I guess, kind of getting all the puzzle pieces pulled together this time.
Well, I guess one other thing I wanted to bring up is with the generic acres, just to point out, you brought up the crop insurance deadlines. It is, say if you plant cotton and it fails for whatever reason, you will be able to plant, say sorghum. It's easy. It's usually used as a subsequent crop, and that would be allocated. You'd be getting the FSA protection for your sorghum this year, and that is something which is a very big positive. For that ability.
Yes, absolutely, and you're right. The way the generic acres program is going to work, if a grower plants cotton and has an unfortunate incident happen where they have to fail that crop out, and then they make a decision on what to do as a follow-up crop, a subsequent crop. If they choose grain sorghum or some other covered commodity, could be sunflowers or maybe even if it's an irrigated situation and the loss happens early enough, maybe an irrigated corn. Crop potentially falling, maybe a little short season corn. Those acres would be, if they're the first commodity crop that's planted on that farm.
Right.
Those crop acres that they plant to those crops do get the opportunity to get allocated to generic base and become part of that safety net for the producer. The insurance rules haven't changed. Our insured cotton would be our first crop, so our first crop. Second crop rules are unchanged there. but it does give a little bit of extra FSA side protection to maybe an uninsured grain sorghum crop or
Right.
sunflowers or something like that.
Sure.